Folks, welcome to the Midweek Roundtable. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. We have our usual guest, Jeff Zananeri. He's the Senior Strategist for Joy of the Trade. It is our usual Midweek Roundtable. Welcome, everyone. Jeff, welcome. Thank you for being here. What's on your mind today, my friend?
I don't know, Roger. I'm waiting for Santa Claus Biden to come out tonight and deliver the goodies to everybody. I think he's got. We've had some internal discussions about this, and I'm definitely on the more conservative side of the spending fiscal tree for sure, no question about it. And I don't know, like you got to keep spending. You're gonna give away this. You're gonna give away that. You gotta pay for it with something. And, you keep telling people, oh, don't worry about you. It's just going to be those pesky rich people that are going to get taxed. But guess what? They have all kinds of like secret hidden little tricks they're playing. And they're going to take away the carried interest private equity deduction, which, people are like, well, who cares? There's very few private equity managers in the country. It's not that big a thing. It's going to be a few $1 billion. They can pay it. They're rich. But what people don't understand is one of the best parts of our financial ecosystem that we have in this country, and which has fostered the growth of all these great private unicorn companies, is our private equity system. And venture capital is an aspect of private equity. Obviously, like arbitrage, they take companies private. But the point that I'm making is to have that huge, strong ecosystem has benefited everyone in ways that people don't understand. Like local franchisors have benefited from private equity and stuff like that. So people don't always understand how if you take away one thing, it'll affect like the domino effect of things. But I don't know. I'm a little bit on a political rant this morning, but we also have the Fed today, so I'm thinking Fed too.
And then tomorrow we've got GDP.
We've got GDP.
I mean, we're talking, we got Fed, we've got Biden, we've got GDP, unemployment numbers. And on top of all of that, we've got the biggest week for the S&P. We've got like 100 big caps reporting this week.
Well, there were some huge earnings. Let me ask you about that. You really dig deep into the fundamentals. Were you surprised by Google's earnings yesterday or by Microsoft or any of these things?
No, not at all. I wasn't surprised at all. As a matter of fact, if you recall, I anticipated that the large cap techs were really going to, I'm talking about the broad sector, not individual stocks. I thought they were going to do better than expected.
Yeah, we spoke about that. We said this is a low-hanging fruit. You could roll back the tape to a couple of weeks ago. We said this is an environment that they love, that they're going to continue to crush in. Well, and we know it. We know how Google makes money through advertising
right,
and YouTube, et cetera, and they're crushing. They're killing it.
They are. And what's interesting is you'll notice that relationship between the long bond and the tech sector has kind of drifted away. And I anticipated that. Remember, I was talking about yield on the 10-year, and I said as soon as earnings numbers start coming out, and if the numbers are better than expected, investors are going to realize that they are in fact better off with the tech sector than they are with the 10-year note, at least for the time being, because on a risk-adjusted basis, we're still moving higher. And just to end this, just to give you a real number behind it, the number we were expecting, Jeff, before earnings came out was 24% upside. We're now at like 27 to 28%.
For what? I'm sorry.
Upside, grow better than expected.
On earnings.
Yeah. The number was
across the whole S&P.
Yes, across the entire S&P.
I think 88% of companies.
Yeah, 88 were gonna. Right, but the number was 24.1%, and now it's moving between 27 and 28%, which is the reason we're seeing it. So we're seeing the Nasdaq is above the 50-day moving line so well, and I think that's going to continue. But on the other hand, Jeff, to contradict that, you have crazy momentum levels, and we are now. We're not in one of the highest levels in 20 years. We are at the highest level in 20 years on the number of stocks trading above the 200-day. We have 95 or 96% of stocks in the S&P trading above the 200-day moving average. It's just,
I
mean,
think
come
we've made
on.
like 80 new high. I don't know what the number was, but we made a lot of new highs this year. It's like constant, right? But if you look across the board of all things priced in money, priced in dollars, lumber, our good friend Adam Sarhan did a cool video on that. And all these different commodities, corn, wheat, copper. You've been drumming copper like like the little drummer boy from Christmas Eve. You've been spot on, mate. And this is all reflation, but the stocks are also part of the reflation story. Money's got to go. Listen, we've got $120 billion coming from the daddy Fed every single month into the system, just the Fed. That's just a monetary stimulus. And then there's the fiscal stimulus from the government, which Biden's going to talk about tonight. So you're looking at a few $100 billion every month coming into the system with the multiplier effect. That has nowhere to. It has to go. Plate. It has nothing. Like, it's not going to just sit there in bank accounts. So I'm not surprised. But as you said, we're getting stretched. We're getting stretched in a lot of things.
It's like that.
Yeah, and so we've had these discussions about So if you miss, or if you don't surprise enough to the upside, you're getting some you're getting some pressure on stocks.
You're getting some tough love.
Yeah, you're getting tough love. And people were talking about Tesla, right? So you'd say this all the time, and I agree 100% on it. Tesla's not, like, it's not a Google. It's not one of these mature tech companies yet, right? And it shows. Like, Tesla's trading at 700 PE, Google's trading at like a 40 or 50 PE, which is high, but Google is also making $55 billion a quarter, and they have a couple of monopolies. They have monopolies. Tesla does not have.
They're on solid footing. I'm sorry to interrupt you, but I'm just adding to it.
They're on solid. You can't just wake up tomorrow and be the number one search engine in the world. You can't just start YouTube out of the blue and have all the powerful viewership.
In my opinion, they are light years ahead of Tesla right now. Not saying anything bad about Tesla. I'm just comparing. I'm just, or like Microsoft, Google, they're in a whole different stratosphere.
They have businesses that are almost bulletproof. Like, you can't just enter their domain and compete with them. But everybody and their mother is coming for Tesla. I mean, like, everybody's
Ford just announced this week. Ford just announced it. I don't know if you heard it, but it was a major announcement. They literally we are getting into. Yeah, so you're spot on. Yeah. It's a lot more speculative. And as you said just now, you could kind of see it based on the way it's the price moves. I mean, it's all over the place. It's an expensive stock, but if you look at it on an adjusted return, it moves like a speculative stock. It hasn't found a solid footing yet.
Yeah, it hasn't because it trades very, like, we have pockets of extreme speculation in the world right now. And there's no other way you can say it. You can say it's good. You could say it's bad. I'm not here to say either. I'm just here to acknowledge that they exist and then try to have a game plan for what to do with those things.
And I think them getting into the crypto game isn't helping either. That the case that we're talking about right now, I think it's going to help companies like PayPal, but not company. I think it's going to put them more in that question mark area. Like, what are you guys doing here? And the truth is, I'm not an economist, but this is something I think about, and tell me if I'm crazy. But I think it's also kind of risky. I haven't heard anyone talk about this. It just seems like common sense to me. Crypto fluctuate. Bitcoin fluctuate. One day it could be worth X. Tomorrow it could be worth Y.
A lot, yeah. 5%, 10% daily
15. We've seen this
normal
before.
Stuff. Very normal, yeah.
So let me ask you this question. I mean, nobody's talked about this. I go to buy a Tesla. I go to the dealership. I order my car. I put a deposit on Bitcoin. You see where I'm going with this, right?
Yeah, you might get like a 10% extra charge on your Tesla between closing.
Yes, or more, right, or somebody may get screwed, or maybe them that's getting screwed. I mean, I don't know. Do they I don't know the details, but these are thoughts that go in my.
I know where you're at. It's too volatile as a mechanism for payment. It's too volatile as a means for trend. Like, money is a lubricant for the economy to exchange goods. Yeah. And crypto is too volatile and too, like, if I had to go, so I do all these, I've been doing upgrades and, projects and this and that. And, like, it's expensive. Everything's going up, right?
Yes.
So I have that to consider, but I'm not trying to time that stuff because you get cute and then it's up like 30, 40%. We know what the price is today. Let's lock it in today. And that's what companies do too, like big corporations. That's
some
how
companies
they manage their treasury. They don't get cute. They don't get
Yeah,
cute.
construction companies hedge lumber. I mean, this is going back
They like
200
the price.
years.
They hedge it today. They like the price
Yeah.
today. They know the economics today, so they got to lock in that profitability.
Orange juice
Everybody
manufacturer,
does it.
commodities, man, of course.
They don't leave it to the wind.
No.
Even if it could work in their favor, it doesn't matter. They know the economics now. They want to know it now. And so I think about it like, if I have a contractor and I go into a contract, and a standard contractor to do a construction project is like, okay, pay me a third up front, then pay me a third, halfway through the job, and then pay me a third when we're complete, or whatever, some variance.
Yeah. Payment up. Right.
Installments for a construction project.
Right.
How you deal with contractors. And so if I had to do that in Bitcoin, like I could, it could kill you. You could get killed doing things like this.
Yeah.
So
yes. Yeah. So I'm always thinking in the background, and I haven't really like thought it through, but I'm always sitting there going, gee, like what happens if I go to Tesla and I put a deposit?
But Roger, like I also think that this is a phenomenon that's going to decrease over time as Bitcoin becomes more institutionalized. And I think you kind of are seeing that a little bit. Like you still get like the random 15% Sunday night move because China turned the electricity off. But if we look at Bitcoin like 2 years ago, it was like 20% every day up and down.
Yeah.
And if you look at the smaller coins, which some of the younger guys we know, the woke bros are trading, those bad boys still move 30, 40% every day. And a lot of these guys put all their money in it. And I just don't understand how they live like that. For me, it's insane.
It's insane. Yeah. I treat to me, and I've said this day one, and I'm going to say it again, just for people out there. To me, I would treat Bitcoin like I would trade a penny stock or something extremely speculative. Where your investment advisor tells you like don't put more than like X amount, like 5% or 2% of your equity. This is like horse betting, and that's where I'm at on all that. That's my idea. So I'm finding it really interesting that this situation's going on with Tesla, even PayPal. I find it fascinating. But you're right, and the truth is, the more liquid something gets, the more interest it gets, the less volatile it's going to get, because it's going to have that market capitalization, which is what happens to bigger stocks. Yeah. So we're seeing it, but again, as I said, and I think you've agreed, we're still in the infancy stage. We are in the baby.
Shift our gears for us and move it to something I
please
want to discuss with you, because I'm curious about your opinion.
Absolutely, please.
So, we've seen the 10-year bond yield move back up, but the stocks don't care. And you nailed that. The stocks don't care. So we were back down at like 153. We're now back around 163, 164. About a 10 basis point move back up, like in the middle of the, in the silence with not much fanfare. And this is all running into the Fed today. And I think that the Fed is going to still pump, but I think the Fed might crack personally and show their hand a little bit, because they love to show their hand on tapering, on the possibility of not buying $120 billion worth of bonds every month as soon as the end of this year. I think that's
interesting.
That's people have to reconcile this.
I have a sore spot on all of this. So I'm glad you asked me this, because I have a lot of, I have a lot of things to say. My thoughts on this Fed, and anybody who's been watching us knows exactly how I think about this Fed. They don't, these are the guys you want to play poker with. They show their hand. Jeff, I wouldn't it's an interesting question. It's a great point you're making, and it's a great question. Typically, under most circumstances, I would say hard no, they would not. But knowing what we know about this Fed, and knowing how they like to tell us everything, whether it's going to happen or not, like a decade in advance, I would not say no.
Right? I feel like people are front running.
You got me.
I feel like people are front running that are smart money kind of. I look at I'm always looking for like smart money clues, big money players, big assets moving in weird ways. And this bond move back up, as it looked like it was going to break down right into this Fed thing, is very curious to me. It's very like, who's moving bonds knowing that we might get, this panic thing happening today out of the Fed? I don't know. I don't
Yeah,
know.
I wouldn't, let's put it this way. I would not, usually I would say that's a pie in the sky. It's a 1 in 100 odds. In this case, I would say it's a good 10%. Yeah,
But
I
we
would
also have, Roger, we also have like, a strong reopening happening, right? So like things have changed. There's still room for Zoom. There's still room for these things. That's not what I'm saying. But in places like Florida, where you're allowed to live a certain normalcy of life, which I know a lot of people were watching our stuff around the world. You're like, wow, what do you guys? You guys are like going to restaurants and stuff. Yes, we are. And you'll go there and you'll see they're packed.
Yeah, we celebrated my mom's birthday 2 days ago. It was packed. The restaurant was packed. There was not a mask in sight. It's business as usual.
People are clamoring to get back at it, right? So how long do you need to keep pumping while like people are doing stuff again? I don't
Agreed.
know.
I think you have a very good point. And honestly, between us and everybody listening to this, I think if they went that route, it wouldn't be so unforeseeable. And actually, you're right. We are doing a lot better. The numbers are looking a lot better than anticipated. We've had two solid weeks where the numbers of unemployment has dropped about 200,000.
Yeah.
That's a 40% drop. Consumer sentiment was off the charts. The stock market, regardless of my personal opinion and the internals, it is what it is, and it is
right
within. So yeah, and I think and you made a very good point last week about the Russell, that people are looking at the Russell in a very wrong way. If they're looking at it like right now, it's not doing great. But if they look at it over the last 12 months, which actually you were spot on, it's still almost twice as good as the S&P, and it's coming back up. So yeah, and I mean, China's doing good. Yeah, we got trouble with Canada and Japan, but those countries are not as important to the U.S. economy as they were 20 years ago. China is. So yeah, you're not. The only wrinkle there is, I think, if they're thinking from a sensitivity perspective of moving the markets and causing a lot of volatility, they may want to wait a little longer to say that. But I wouldn't throw it out of. I wouldn't rule that out at all, man. Not at all.
Yeah, because he says everything, he's just like, and also the markets run a lot. So they're playing the market too, in a way, right? So like when the market, and they always look, and this is a little trick for people at home, their scorecard is they look at year-to-date returns. Everybody is evaluated on, performance, right? And portfolio managers are like, what am I up this year? And so, I think Jerome Powell is looking at the S&P and going, all-time highs up 12%. If I have a spot to introduce the idea that I'm going to taper, because I like to forecast everything.
Yes.
12% after the first quarter with the best month ever isn't a bad spot to do it.
Especially in this, sorry to interrupt you, especially with this momentum of earnings that we're seeing right now.
That's what I'm saying. So he wants to introduce these ideas because, as we know, he likes to introduce every idea. And he's looking for spots where he can just sprinkle them out in a place where even if he takes a 5%er on the chest after a couple of days of selling, market's still up 7% on the year. Not bad for a quarter. You did an entire year's average S&P returns in the first quarter anyways. So I'm thinking of it from that point of view too, like a game theory, a little bit.
Yeah. I got to be honest with you. The more I'm hearing it from you, the more I see it. And I'm usually seeing things, but you're right. I was thinking he was going to do it, but I was thinking he was going to do it more towards the middle of the summer to end of the summer.
Yeah. But I don't think he's going to start tapering until late.
No. But he's going to start talking about it like he talks about everything else, and saying that if something like this, if we continue to see the current pace of the economy moving in the same direction, how he always broad,
hot, but the bond market's putting the gun to his head, right? And so is the commodities market, right? Like,
yes.
Can you let lumber go to like infinity and beyond?
No.
There's negative impacts to a lot of these things.
Oh, absolutely.
Try hiring people to do stuff. Try doing there are pockets of this economy which are not Google, which are, require people to hire at $15 an hour or $12 an hour in order for their business to grow. And they can't do that. So if they can't do that, then they can't grow. And so there is a downside to letting prices and even though they're saying, oh, there's no inflation, that's bullshit. We know there's inflation.
Oh, come on. That's
we know
nonsense.
they know. And we know they know, right? So the bond market's kind of putting the gun to the head a little bit, I think.
No, I think you're onto something. Again, I did not think he was going to start going in that direction toward
I'm speculating.
But of course, I would not throw it out of the water. I would, you know what? When you introduced the topic, I was thinking maybe 5-10%. Now that I've had a chance to kind of,
like 30,
think about maybe even 20. I mean, you're not like talking about 1%.
Well, he said last time the key sentence, there's always a key sentence, and it's because they're not doing anything with rates are zero. So the key sentence last time to me was, I'm going to taper. We have talked about tapering, which was a new concept. Yeah. We're going to taper before we raise rates because nobody expects a rate hike until 2023. And he said, well before.
Yeah. Again, I was thinking
he didn't have to say that. He didn't.
No. It's very possible. Again, I think the market may, in his opinion, I'm just looking at the market from his perspective. I think he may be looking at the global economy and saying, hey, I want to keep sprucing it up. But if he says that, it won't really impact other countries. If anything, I don't see, I'm trying to find a good reason why he wouldn't do it, and I can't. So I think you may be onto something, especially with the financials being so strong, especially with the financials just being so damn strong.
Roger, the bond market vigilante, listen, like this, and I've thought about the bonds more too. If he says nothing, we do nothing, then the bonds are going to get sold because, then there's going to be wild inflation.
Yeah.
If he says we're going to be tapering, then the bonds are going to be sold because then they think that. So like many of the scenarios for bonds is lower.
They lead. Yeah. They all lead. Right? They're all going to right.
Most scenarios lead to bonds being lower and yields higher.
Okay. Let me ask you this and we'll move on. What do you think? Bottom line, where do you think interest rates are at end of the year?
Over 2% on the 10-year.
Okay, I just did a video before we did this, and I haven't changed.
Not by much.
I said 2.25. I said 2.25, 2.5.
I think 2.25 might be if you look back at pre-COVID, we were at like 1.9.
Yeah.
And 2.25.
Yeah.
And I think like based on inflation, we should be much higher than that.
Yeah. But they're gonna,
there's a home there. There are sellers there. There are people. Yeah. There are people that
So I think so you and I are not off. We're both. I'm saying 2.25 to 2.5, and you're saying
no. Yeah.
I'm hearing 2.25. So we're not far off. And my
Which
theory,
financials can run a lot more.
Yes. Oh, absolutely. Especially in light of what we're seeing and the fact that they are just now getting above that pre-COVID level in terms of price action. Yeah. Absolutely. Energy, I can't say the same. Quite opposite. But
any hard asset that isn't flying like corn and copper right now should be giving you alarm bells because this flood of money is getting priced into dollars and hard assets. And if they can't catch price appreciation with that just artificial bid happening, what's going to make it go up? What's going to make gold go up?
Yeah. If we haven't seen it in the last 3 months,
you always have to think to yourself, this is my mentality. This is your mentality. And this is for people at home. You always have to think to yourself, what would be a catalyst that the market doesn't really know yet that could change things or make a big move happen? And if you can't come up with a plausible concept that's a good catalyst,
the only major catalyst,
you're not going to get your price move that you want.
No, you couldn't be more accurate. The only thing I could see that's causing gold to really move would be another major pandemic, this variation really hitting us hard.
That's a good point.
Going to where Japan is.
Black swan crisis.
A curve totally from nowhere. Yeah. And I'm not, and neither of us are seeing that.
Like a bad tail risk, basically.
Horrible
tail risk. Yeah.
Yeah. Like us thinking we're going here and we're literally going right here. Just a total
a war that no one saw coming. Something.
Yeah. Yeah. So no, I'm not seeing that at all. And I know you're not either. So before we conclude, man, I don't know where the last 27 minutes have gone. This has been a great set. We got to do this more often, Jeff.
Yeah.
What are you seeing right now? Short term, in light of earnings, opportunities, risks, sectors. Give us for people at home, what they should be focused on right now.
Well, we both discussed this. We both have been looking at a lot of the same similar sectors. I like still semiconductors. I dislike oil. I like financials. I dislike utilities because I think yields are going higher.
Hmm.
Those are a few that just come bounce off the top of my head right now.
I like the financials. I like them more and more every day. And I think a lot of them still have a good, like you and I both said, they still have some good potential upside.
Yeah,
I'm looking at financials that are not related to bank stocks, like insurance companies.
yeah,
I'm looking at specific
non-traditional.
yes, and I think and also financials mixed with technology.
Yeah, fintech.
Yeah,
Yeah,
exactly,
I like
exactly.
fintech too.
So I'm also starting to get hot and heavy again on the cloud sector. It's
Nice.
starting to move up. I'm starting to get a little hot on the solar stocks. They are now trading above the 50-day line, and we are. And
They
again,
came down
that's
a lot, so
yeah,
they're
and that
picking
goes
back
to
up.
yeah, and that goes back to our Russell story. How Russell just too much too fast, and I wouldn't look at this more. We've talked about this. Just to pull back, they're still strongly over a 12-month basis
Yeah.
outperforming the S&P, and they have been trending again. So I'm looking at the solar sector and another sector that a lot of people have stopped talking about. I think we actually talked about it internally at Wealth Press yesterday. Was pot stocks. I think we're
Right.
going to see. I think we're going to see another run up in pot stocks as we get towards the closer to the end of the summer. I think
I
Texas
think there's going to be a massive consolidation in weed. I
yes,
think there's going to be like
yes,
takeovers. I think it's going to be the summer of pot takeovers.
could
Potentially.
not agree more. Texas just in Texas. Can you imagine Texas and pot in the same sentence?
People need
Te-
money, dude.
yeah, yeah. Let me tell you something interesting. This is
Governments need
this
money.
when
Yeah.
I was 3 years ago, I drove through Texas as I was moving to Florida. We drove here because we had a
Yeah. Yeah.
pet and my
I-10.
daughter, and I've never seen more pipe shops than in Texas.
Weird.
Every other corner there was a glass shop. I was looking around. I'm thinking, did they legalize it here? And meanwhile, I mean, everybody's smoking it and laughing about it. Meanwhile, so finally, the Texas is going medical, and if that's the case, we are so close to getting it on a federal level. So I think we're going to see some. I think we're going to see more of that.
Yeah, the fact that they allow business banking now for these companies is a huge.
Schumer said even if Biden is not on board, he's gonna try. And I mean, like 80% of the country's pro right now. I think it's just a matter of time.
Look, we're in Republican state in Florida, and they're on the precipice of legalizing it recreationally. We've had it medically for a while,
Yeah,
and you're seeing sports betting was something that's always been kind of like shunned from Republicans, not big
yeah,
fans,
right.
and that's passing. We're gonna have
Yeah,
sports betting now, casinos. Like they need money. They
we
realize how big it is, and they can't fight. They can't fight
everybody,
reality.
every state wants more money. Bottom line, every
Listen,
state.
just the American way. It's like businesses. If you're running a business and you see a potential for a huge revenue stream and you don't tap into it, and it's within your core ethics and what you do, how you're not
You
doing your
have to.
job. You have to.
Exactly. Before we conclude, one last question. I always conclude with this. Can you give us any interesting pair trades that you're looking at? It doesn't have to be hot trades. Just want to see what you're looking at, kind of get inside your head on what you're eyeing these days.
Yeah, it's been kind of tough because everything's kind of been so bullish. Like, so to find a short is kind of like, it's been like a little bit painful. But I managed to find, and we got into this. I'm gonna toot my own horn here and do a little Money Links plug. We put on, and this is an oldie but goodie. If I have like a really long-term secular trend in a Money Link, like AMD and Intel, and one company's eating another company's lunch, I just time in and out. And so on the 14th, we put the trade on. Intel was above in the mid 60s. AMD was down in the mid 70s. Long AMD, short Intel. 2 weeks later, home run. Both of the stocks have
Beautiful.
moved over 10% in the direction I want, and the market does what the market does. That's the whole point of a good pair trade, is that you don't care what the market does. It's the relationship between the two legs that matters. And it's easy when you see one day, and I track it. So I have a spreadsheet. I have a database that tracks their correlation. And AMD trades up and Intel trades down on the same day a lot. It's happening today again in the morning. And so that's something that I want, people that don't know how to trade pairs. If you want to learn how to trade pairs, check out Money Links. You might not have seen anything like it.
Yeah, it's a great way to trade, folks, especially when it's always a great way to trade because you're not market dependent. But what I love about it is that right now the market is grossly overbought. So it's kind of hard to pick longs, but pair trades, hell, who cares? It'll go down. I mean, it's all good. So right. you don't have to sit there on the sideline and wait for the market to do certain things to get into a pairs trade.
And like everything at Wealth Press, for the trading guys like us anyways, we're using puts. We're using so you don't have to be naked short. It's not super hard. It's not it's not it's not going to be over your head. The same way you can buy a call, you can buy a put, on whatever stock we're betting to go down. And so it couldn't be any easier.
The stocks that I'm short right now, we're looking to short New York Times.
Oh, I like that.
And Splunk.
I'll always like that.
New York Times and Splunk. Splunk, yeah, SPLK. Those stocks are breaking down pretty hard right now. I haven't looked at Splunk. It was a darling of, a COVID darling. And also Peloton and Zoom aren't looking all that great either. Just FYI. I'm not selling them, but they're on my doghouse list.
Yeah, so. Peloton for me was cool, but people like going to gyms. Like it.
Yeah. It was a good substitute. Yeah, it was a good substitute, Yeah. All right. Well, listen, Jeff, this was an amazing session. I can go on. I could probably spend an entire day talking about the markets with you, and it would just pass by like 5 minutes. Sure. This was a great session. Folks at home, if I hope you're getting something out of this. If you are, please send us feedback. We want to hear from you. If you have requests, if you have questions, if you have comments, feedback, anything, we don't care. Let us know. We want to help you become a better trader. So Jeff's email is jeff@joyofthetrade. That's jeff@joyofthetrade.com. If you want to reach out to me, real simple, support@marketgeeks.com. It'll get to me like this personally without going through 5 different people before going through me. So support@marketgeeks.com, jeff@joyofthetrade. Folks, have a wonderful, wonderful day. Jeff, thank you for your time, and I will talk to you later throughout the week. And I love the session. It was a great session. Take care, buddy. We
went a little bit long, but whatever.
I'm sure it's okay. Mea culpa. You have a great day, buddy. Bye.
Yeah, buddy.